Well, friends, we've made it to the back half of April, and the market certainly feels different, doesn't it? Let's talk about it on the weekly update. Okay, friends, let's take a look at the market. Here's what you need to know. First up, I wanted to kind of revisit my theory as to what was going to happen in the market. If you'll remember, we've been talking about it on the channel for quite some time now. I said there was all these important market moving dates around options expiry, reciprocal tariffs, reprisals from China, and then a liquidity drain and tax day. And one of the things that we've been talking about, or at least my theory on the market, was that the back half of April was going to feel a whole lot better once we get past all of these things and once we get into earnings season. So let's take a look at the market and see how that thesis is playing out. Well, red here is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average. And what do you notice? Well, we released on our 200-day moving average at Liberation Day very painfully. The stock market going down to, I think, around 480 on SPY, 4,800 on the S&P 500. But if you look at where we are today, today is actually pretty good. The market looks quite productive. April 15th tax day was somewhere in this zone, which is basically, the end of the news events. And as we start to move into what actual economic activity is, I think the market has been firming up and it looks like it wants to continue. Today, when we're talking, we're right at the top of the post-Liberation Day range. And so what it looks like to me is it looks like the market wants to test on the upside to see, hey, I think things might be okay and maybe we want to move back up into this zone around the 200-day. So things look extremely positive, right on schedule. Kind of interesting that it's going to work this way. We don't have the all clear yet. So yes, I'm positive. Things look good. The market's obviously responding. We don't have the all clear. The all clear will come at a close 3% above the 200-day moving average. And we've got a lot of battle. There's a lot of war left to fight here. We're going to fight around the 50-day. We're going to fight around the 200-day from the underside. So there's still more work to be done, but the battle is progressing pretty well. And here's the reason why. This is FactSet earnings scorecard. 12% of the S&P 500 has reported, and that's a very low amount, so we don't want to draw too many conclusions just yet. But 71% of S&P 500 companies have reported a positive earnings surprise. 61% reported a positive revenue surprise. I think the big story that isn't being told, what doesn't get played out as much as, Donald Trump sort of doing what he's doing, what isn't being talked about is how good corporate America is right now. There absolutely was a bump in economic activity post-Trump's election. And what that is doing is it's saving a lot of companies' quarters, certainly. Actually, the quarters aren't even being saved. The quarters are just great. But it's saving their year and all this tariff stuff that's yet to come. Earnings growth is strong, 7.2. Earnings revisions are also pretty strong. And valuation, as of right now, because the market just fell out of a window in the last 3 weeks, valuation's pretty low. We're below the 5-year average, still above the 10-year average, but things look pretty good from a fundamental standpoint. We'll look at it in charts in a couple ways. Here's S&P 500 earnings above, in line, or below estimates for the 12% that is reported so far. I'm just going to focus on the S&P 500 here, 71% ahead of earnings. Now, as I said before, earnings, you don't really want to follow the bottom line too much because companies will always beat. But I'm showing you the earnings here because if you'll remember from last quarter, it was 50-50 blend here. Right now, we're something like a 71% beat rate. Pretty good. Here's another one. I think this is probably the biggest story, guidance. And this is companies reporting fiscal year positive and negative guidance. Now, what the news would have you believe 3 weeks ago is that tariffs were just a complete sea change in the environment. And so because of that, we didn't expect companies to keep their previous guidance. We expected them to pull them, and we expected all companies to bring their guidance down. What's actually happening is nothing close to that. As you'll find, the news can be pretty hyperbolic at times. And what this data shows us is that the economy is extremely strong. It's a large thing with a lot of inertia. It doesn't turn on a dime. The economy doesn't switch on or off depending upon what Donald Trump does. Here's S&P 500 companies, 41% with a positive fiscal year guide. That wasn't supposed to happen. This is supposed to be 100% negative if you let the news tell it. 59% negative, mainly in stuff businesses on margins. But what I have been surprised by, so many companies have come out and said, hey, On this quarter, we would have raised our fiscal year guide. We're keeping it the same right now just to see what the tariff impact is. And if you've been following the channel, you know I'm not really worried about tariffs at all. And so I think this number is going to continue to improve as the year goes on, as people are able to digest what happened in the last 3 weeks. Here's one final thing I'll say. So this call, if you're sort of getting the vibe right now, everything's pretty positive. We don't have the all clear, so that's not what I'm saying. But what I am saying is at least you can see the other side of the story now. You know, the world was ending 3 weeks ago, and where we are today looking back, I think it's pretty clear, hey, actually the world isn't going to end. But one of the things that I said it was going to be a positive in this tariff war is that companies are really good. They're really good. They have diversified supply chains. If you think back to COVID, I mean, China was pretty much closed for business for about 2 years straight. So if we get tariff deals with the rest of the world, and if we never resolve the China situation, although I think we are going to resolve it, but let's just say worst case scenario, we don't, companies are really prepared for that. They've mostly already moved supply chains, or if they haven't, then they know what to do. I'll take this one from Apple. Apple's important because it's tremendously impactful to where the S&P 500 goes. As of right now, 1 out of every 5 iPhones is manufactured in India. How about this one? Apple plans to move production of all US sold iPhones from China to India by 2026. Isn't that interesting? That's probably sort of like a miraculous thing 3 weeks ago that they would have told you, there was 0% chance of that's happening. And now this is in the news flow. And I think Apple can do it. And so what I would say is, tariffs are uncertain, and certainly that's going on. And certainly this market event isn't over. There's going to be more chapters to be written. But what I will say is companies are really good. These businesses, this isn't like business in the 1950s. This isn't like business in the 1970s. Businesses are very nimble these days. They've got a lot of really great data, and they know what to do. And so I think business, which is primarily the determinant of the stock market, I think business is going to do well. So there you go, a little bout of positivity for you. I'll see you next week for the news review. Enjoy your weekend. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.